All right, good evening, everyone. This is Ajit Mishra, and welcome back to the weekly webinar of Week Ahead with Religare Technicals. Those who join us regularly, they know the pattern. For those who are joining us for the first time, I'll just share, how this webinar, progresses. So first, we talk about the market performance, how the key indices performed. What was the, positioning on the sectoral front when it comes to gainers and losers, and followed by the top performing names and underperformers from the Nifty 50 basket, and followed by our view on the key indices, both Nifty and the banking index, and some of these stocks which are positively positioned or wherein we can see fresh pressure in the coming week. After the presentation, we'll do a quick poll just to understand, whether you like this, session or not, or what kind of, webinar kind of, updates that you want to hear from us. And finally, we'll end the session with a Q&A. So you have this Q&A button in front of your screen, which you can use post the poll to ask your questions. And we request you to please limit your questions, around the, topic that we're going to discuss. That is the broader market. Basically, it's not like any individual stock specific queries, which might not be relevant for the other participant. So yeah, with this, we'll start this session with the quick disclaimer that the premise behind this webinar is to share the insight. It's not a trading or an investment recommendation. So, before you make any decision based on the information that we share here, please check with your financial advisor. Now, talking about the key indices, both Nifty and Sensex managed to end in green, after a very, strong negative week last week. So it's a kind of a breather that market finally had, and thanks to the rebound, the final session that is today. Across the board, we saw a recovery. Nifty gained roughly around 1.5%, banking index roughly around 2%. So it means, broadly, if you see the week, it's more of a consolidation week, with Nifty making a low closer to around 17 to 55 levels. And then we saw this rebound wherein Nifty has almost reclaimed the long-term averages that we'll discuss in detail once we're going to talk about Nifty. But on the sectoral front, you can see the list of gainers on the left-hand side of your screen, where in reality, metals, banking, financials, and energy. They were the top performing names from the sectoral basket, wherein IT, pharma, and auto, they were slightly on the back foot. And so when it comes to contributions, so basically banking and financials, they were the one actually who largely contributed to the recovery, considering the weightage that we have for the banking and financials. So both these indices put together have a weight of roughly around 39% in the index. Now, next, the top 5 gainers and losers. So you'll see two names from the Adani group on the winning side, on the gaining side after a long period of underperformance. So both Adani enterprise ports gained in the range of 42 to 22%, followed by 3 names from the banking basket: SBI, IndusInd Bank, and ICICI. At the same time, on the losing side, we have one name from the pharma space, that is Cipla, which lost roughly nearly 9%. Then we have 2 names from the IT basket, Infosys and Techem, in line with the sectoral move. And apart from that, UPL and Bajaj Auto from the other sectors wherein we saw profit taking. Now coming to our view on the market. So this is a weekly graph of the Nifty index. So we were here last week, when the Nifty engulfed the gain of last 3 previous weeks, and there was a very strong possibility that this tone negative tone might extend further. So initially the tone was negative. We drifted lower. We tested 17 to 50 mark, but rebound or recovery in the banking pack, something which helped the index to recover in the final sessions. So are we saying that this recovery is a reversal? That is too early to say this, because for that we need to engulf this entire red candle, means to surpass 18,000 mark and sustain. Before that also we have a resistance around 17,750 mark. So these are the two major resistance area that Nifty is going to test next week. Above 18,000 mark, we can say this is consolidation or the corrective phase that we are seeing in the market might end, and we are going to see the resumption of the uptrend, and Nifty inching towards a higher level. In case this negativity continues, so below 17,300, the tone would again shift negative, and 17,100 that we discussed last week also will act as a strong support area. So broadly, indications are mixed. And why we are saying this mixed? Because today we have reclaimed the long-term averages, that is the 200 days of exponential moving average on the daily chart. So it's definitely positive. But at the same time, we have multiple resistances to cross. So there's a channel resistance, there is short-term moving average placed around 17,650. Then channel resistance around 17,700 marks. So there's multiple resistance to cross before making any meaningful move. So the move is likely to be gradual when it comes to the index, despite the positivity that we are seeing in the banking pack. So the idea is that since we are seeing consolidation with a positive tone, means we are seeing some recovery now, one can continue with sectors or stocks which are showing resilience, wherein we are seeing outperformance and relatively higher strength. So still we are seeing several stocks wherein we are seeing buying interest. The stocks are trading around the record highs. We'll talk about few names wherein we see fresh strength or a possibility of a strong rebound. So that we are going to discuss in the subsequent slides. But as of now, the indications are in the favor that tone is likely to remain positive until we break 17,300 mark. Means this consolidation may, this recovery may extend further. Now coming to the major, component or major aspect which is currently dictating the index trend is the banking index. So last week, the banking index in line with the Nifty also formed a very strong red candle. Means there was a decisive down move, but this week we have almost engulfed the entire last week's decline. So that clearly shows that banking is comparatively stronger, and the outperformance that we are seeing is likely to continue. But in the banking index also we have multiple resistance to cross. So 41,600 to 42,100 means this zone. This red line is 41,600, then this closer to this top, closer to around this previous swing highs, we have 42,100 zone. So broadly this area will continue to act as a resistance. Downside 40,300 to 39,700. So broadly I would say, rather, if you want to pinpoint any one particular point as a make or break level, I would say that 40,000 spot would be the level. As long as we are holding above 40,000, it is okay. We may see some consolidation, some whipsaws, volatile swings, but the tone is not going to be very negative in the banking space. Means there will be a possibility of a recovery. Downside below 40,000, you expect that all the recovery that we are seeing right now would fizzle out. So 40,000 is the make or break level, but in between also we have multiple levels to look at. So 40,300 to 39,700. These are the two other areas wherein we have support. So within the banking pack, since it's looking comparatively stronger, the recovery is broad-based. In fact, the PSU counters also participated very strongly in today's session. But we reiterate our preference for the private banking names because they are less volatile in comparison to the PSU pack. So that we have been keep on sharing, this during this webinar that it's very easy to maintain stop losses when it comes to the private banking names, because the volatility is slightly lower in comparison to what we see in the PSU pack. So we reiterate our preference for the private banking names. So stocks like ICICI, Axis, SDFC, and Limited from the finance space, all these stocks are looking positive to us. Now coming to the stock specific approach, what all stocks that one can look at for positive or negative side trades. So first on the list we have L&T Finance. So L&T Finance, we had this discussion earlier also about this stock. When we had the fresh breakout closer to around this area, after making a reversal pattern, which is an inverted head and shoulder reversal pattern on the weekly chart, and then the stock, after witnessing a very long-term trend line breakout, it's still hovering around that area. So it's offering a buying opportunity, it's offering an opportunity to accumulate in a market like this, wherein we are seeing, excessive volatility at times due to some domestic factor, at times due to global markets. So this stock has multiple supports around the current levels, means this 84 to 90 zone, we have multiple supports to look at. So accumulating such stocks wherein the risk to reward is favorable, because we know the downside is capped. No, in the sense that we have multiple supports to look at. So it means the stop losses are very closer. And in the case of next swing above 96, the move and the upside potential is huge. So that is something that one should look at, especially in the market like this. So L&T Finance is the first stock on the positive side. Next on the list is Power Grid. So usually you won't see such stock, witnessing traction, but this stock, after this consolidation in this triangle pattern, is finally, it's almost there. Like, means the breakout is almost confirmed, because the kind of volumes that we are seeing of late alongside with the price action. So it's almost clear that this breakout is almost confirmed, and this up move will continue in Power Grid, in the coming week as well. So L&T Finance and Power Grid, these are the two stocks which looks positive to us. Now coming to the stocks which are still, maintaining the negative tone. So one such stock is Divi's Lab. In fact, the pharma space, the pharma sector is still, underperforming, and we are not seeing any respite, despite the oversold position. So Divi's Lab, a clear declining channel. And, after this sharp decline, 2-3 weeks of consolidation, but again, we are seeing that, tone is turning negative. There's a possibility that any profit taking might trigger in fresh decline in Divi's Lab in the next week. And lastly on the list, Jubilant Food, that we have, this stock is constantly in our list on negative side for the obvious reason, because we are seeing consistent underperformance. First, this zone, this trend line breakdown, then we have long-term moving averages breakdown, and now a bit of a breather or consolidation, but the tone is negative. Again, we expect in the next leg, it could, come closer to around 400 and maybe lower. So just to sum it up, when it comes to the key indices, Nifty rebound is likely, but we have multiple resistance to cross. So focus more on stock specific approach instead of focusing more on the index. The positive aspect is banking looks comparatively stronger. It has weightage also in the index. So that might help the index to inch towards 17,750 to 18,000 zone, which are the key resistance area in the index. Banking, as we've said, that is comparatively stronger. So focus more on the private banking names. 40,000, the key make or break level. As long as we are holding above 40,000, there's nothing much to worry. And upside around 42,000, 42,300 could be the zone where it might inch toward. Stock specific, L&T Finance and Power Grid are the two names which we like, and Divi's Lab and Jubilant Food are two stocks which looks negative to us. So yeah, with this, the presentation ends, and now we'll have a quick poll So please give your feedback and then we can start with the Q&A session. Please quickly fill the feedback so that we can start with the Q&A session. And in case if you're done with the feedback, you can start posting your question using that Q&A tab. And as we've discussed in the beginning, that please make sure that our questions are around the broader markets, means the key indices, sectors, not individual stock specific queries, please. Please quickly fill this feedback so that we can start with the Q&A. And meanwhile, you can start posting your questions also once you're done with this. All right, so let's start with the Q&A session now. Okay, the first question is on the IT index. So IT index, see, as a sector, we were bullish till last week, but with so much of volatility in the US market, because we are very closely, mirroring the US market, especially the Nasdaq Composite, for the price action in the IT index. So because of that reason, I'll just recheck the key levels that one should look at. So yes, 29,500 is basically the area where we have crucial support, for the Nifty IT index. So as long as we are holding above that mark, it is okay. But since we are seeing mixed participation within the IT index, so if you remember that in the beginning of the presentation, we've shared that out of top 5 losers, 2 was from the IT pack. But at the same time, HCL Technologies and TCS, they were still holding strong. So it's not that all the sectors or stocks are moving in tandem, but yes, comparatively, you can say that 29,500 will continue to offer support in case if this volatility continues on the global front, especially in the US market. Okay, next question from Mr. Shravanan on next week Nifty and Bank Nifty chances to go up. So that is what we've shared, that yes, chances are strong that we can see further up move, and that lot depends upon how the banking index, because it is outperforming, has considerable weightage in the index. So how it's going to perform is one factor. Another factor is that since we are closely following the US market, so I'm just giving you an example. The day before the markets were down, today the markets were up. The similarity that we can see is that day before the US markets were down, and today the initial uptick can be largely attributed to the recovery in the US market. So broadly, we are following the US market. So sustainability of of an up move or a recovery in the US market, combined with how the banking index performs, will largely decide that how the market is going to behave in the coming week. For Nifty, we have multiple resistance to cross. 18,000 is going to be the key resistance area for the next week. Okay, next question from Kumari Radha on Nifty Pharma. So see, that is what we've shared when it comes to sectors. One sector which is not seeing any respite, despite the oversold position, is pharma index. So it's gradually, drifting lower. Mostly pharma components, they are also witnessing negative trend. Cipla plunged sharply, were among the top losers. Then we had good stock from the pharma basket which we were holding earlier, like Sun Pharma. Therein we are seeing profit taking. So except it, Dr. Reddy's, if I'm not wrong, almost all the other pharma counters are reading under pressure. And it's not that the Dr. Reddy is also doing very great. It's just that the decline is very gradual in Dr. Reddy's. So please avoid pharma for a time being for long trade. Okay, this question is something which we can think of, like answering, considering that most of the people have this questions around this, that how to trade and how to buy, means even it's okay to trade the Adani group of stock at current levels or not. So our answer is that we are not recommending our clients to trade Adani group of stocks for the obvious reason, because excessive volatility is very difficult to maintain stop losses if you are trading. If you're short-term trading, you need to have stop losses in place. In case if you don't have stop losses in place, it means you are speculating. You have no clue, where to exit. So yes, the Adani group of stocks were among the top gainers this week, but still I would say that this volatility which we are seeing in the stocks, almost impossible to maintain any logical stop losses. Means 8%, 10% kind of a stop is something that we don't recommend, because once you erode 10% of your capital in one single trade, in one single stock, and that too in a single day, it's very difficult to regain that confidence to re-enter into the market and make the next trade. So for a time being, avoid this group stock for short-term trading perspective, and let them stabilize. Let them form some a reasonable range wherein you have stop losses and targets clearly defined. Okay, next we have Shantu Kumar Ram on like chemical and fertilizer sector. So this sector, I understand, was among the top performing sectors till last year, wherein there were news related buying interest. Stocks were doing exceptionally well, but all those buzz or events are behind us now. So now we are seeing normalization of the price. The prices are cooling off from the record highs. The stocks are dormant. They are not seeing any action. And it's similar kind of a trend in the fertilizer stocks also. So I feel that in case if the view is short term, please avoid the chemical and fertilizer stocks. We have other stock sectors or stocks to look at, especially if the view is short term. Okay, next we have Pritesh Thakkar on metal index. So yes, metal index, last week, roughly around 4% kind of a gains, decent gains, but we still have multiple resistance to cross, especially from the short to medium term perspective. If I, see the daily and weekly graph. So within the metal space, general steel looks comparatively stronger. And then we have JSW Steel also. But I feel that these top two performing names, other than that, yes, SAIL looks okay on charts. But again, we are seeing very mixed trend, within the metal space also, wherein participation is limited during this recovery. So avoid any aggressive long in the metal space for a time being now, because we know that's a high beta sector wherein the swings are very rapid. So after 2 days of decline, we've seen that all the metal counters are witnessing rebound equally strong. But will this move sustain is something that we'll come to know once the market is going to stabilize. So as of now, limit your positions, and general steel, JSW Steel, the top two performer can be preferred. in case if you are looking for short-term buying opportunity. No stock specific questions, please. That is what I've requested. And Mr. Rajesh, in case if you're associated with us, you can separately call us to understand and discuss about your queries related to how one should look at the messages when it comes to profit booking messages and other messages. We'll be happy to explain you on that. Any questions on broader markets largely? So, because though if we talk about sectors, we have covered almost all the sectors, except couple of sectors like reality, wherein we are still seeing mixed trend and no decisive move. But yes, couple of stocks like Oberoi, Prestige, they are seeing a bit of traction. DLF is also witnessing recovery. Rest, one sector which is one should definitely avoid for long trade is pharma for a time being now. And preferred sectors, like we said, that banking and financials, that will remain on the radar, but one needs to be selective. And then we have select counters from the energy basket also, which are doing well. All right, so we don't have further questions in queue. So with this, we can end this presentation over here. Thank you everyone for joining in. Next week we'll join at the same time. Till then, take care.